Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. Oh my gosh, the camera's not working. What the heck? Oh no, you can't see me. Wait. There we are. Hey guys, it is Thursday. Oh, can you believe it's already Thursday? Something's happening, so let's just go through the charts really quickly. I don't know what this is going on. We got PPI in a few minutes here, so I want to make sure I got things turned on here. This is like 3 minutes. Going over the chart, you can see like the treasuries are just like spiking up here after having pulled back just a little bit overnight. S&P 500, a little positive. Gold and silver still looking pretty iffy. Oh, silver really almost towards these lows now. They've given up everything. And copper doing something, moving up. Bitcoin moving here. The dollar moving here. Okay, so what is the headline? There's got to be a headline. Is it something about the ECB, perhaps? I'm kind of wondering if it has to do with the ECB. Oh, it was the ECB. Hahaha. Euro USD moves lower after the ECB raises rates by 25 basis points. But is it going to be like the most dovish raise ever sort of a thing? That happens a lot, right? ECB rate statement, and was the spike was on the ECB rate statement. Gotcha. I thought that came later, so that's okay. So this is the time when we kind of come in and like figure out what's going on anyways. So let me where is the Discord? Way over here. So we are going to get the press conference here, but first PPI, U.S. core PPI month over month. We're looking for a reading of spot 2. So we're in for a little bit of a ride here. Let's see what happens. Hey, Ostrats. Hey, Octavius. So first let's watch this PPI. And then probably I want to go into hibernation for the ECB press conference, because that's usually awful trading. Big order there at 08 that is not pulling with everything else. Is it gonna pull? Maybe it pulls. I mean, we still got what, 30 seconds. Okay. Okay, so the core PPI month over month number that we're looking at is in line at spot 2. It looks like PPI month over month is spot 7 versus spot 4. So oil and food, some of these other costs that get taken out in core were higher than anticipated. Also, retail sales month over month was much higher than expected, so that is gonna crush them. U.S. retail sales spot 6. That's the bigger deal. Oh yeah, also in U.S. initial jobless claims, 220 versus 225. Yeah, that's a sell for sure. Wow, look at the micros. There was 2 contracts at every level there, and they pushed through it, huh? Wow. I'm impressed, micros. So you're usually not that. I'm really curious to see now, do the bonds break out here on one way or another? That could be something enough to maybe push us back towards the bottom of the end of the range and like break out. Except for that we have the ECB coming up, right? And I'm not quite sure I understand why the ECB raising. I gotta tell you what, man. Usually I'm pretty good, but this week, well, and I would still say I'm pretty good because this week, generally, you know, like with the CPI, I called the CPI pretty okay. But there's just been like little nuances that I missed. But this one, I thought, okay, ECB raising, that would be pretty bad for interest rates again here. And the Treasury's bought on that release. That really surprises me. I did not expect that at all. I also wasn't really thinking about retail sales, so retail spells being spot 6, that was not something on my radar, and that was something that I missed as well. So I feel like I made some really good calls this week, but I also got some, you know, missed some really big things, you know? I got the rundown, but only took 5 ticks. Well, the micros aren't following as well on the pullback, by the way. Now, we don't have a bond auction today. We've just got like the 4-week bill auction now. You hit 3 full lots? Dude. It does, honestly. To be honest with you, I don't know if I really have what it takes to make it as like a big hitting trader, like with the big contracts, because when I start putting on contracts, it makes me nervous no matter what. And I actually think that like you know, like there's some trauma encoded in my brain there that would work against me if I was ever started trading big. So I think I will always be just like, I will scale as I need to, or as I should, as I have success, but I don't see myself ever putting a huge sum in there and then, you know, like really ramping up or anything like that. I think it's better for me to just keep it small and just keep doing what I'm doing, so that I don't stress myself out, you know. Or am I gonna trade? You know what? I don't think I should trade today because I'm like on 4 hours of sleep, man. So my autistic son woke us up after midnight, like just crying. I think it was because he like punctured his foot the other day. And that's probably gotten a little infected, and he was crying about that. That's what I think it was. You know, we're all sleep deprived, so we argued a bit about it and everything. And then after that, I had a very difficult time going back to sleep. So I'm concerned that my own decision making would be really impaired today. On top of that, trading during the ECB press conference usually sucks. It's just some of the worst trading. So I don't think I want to play with that. We're going to have to watch it. ECB Governing Council press conference. Oh, it doesn't start for another 10 minutes, so. Chat is disabled for this live stream. Of course it is. Why are there spreads on the 10-year but not on ZN? Well, ZN tends to have more liquidity in general. So yeah, there's usually, you know, the spread is as small as possible. Whereas in the 10-year, you know, there's just not as much liquidity. There's just not as many people trading it. And so you tend to have a little bit more of a spread, especially when it's moving around. So you'll notice that when the spread is too much over there in the 10-year, I'm a little bit wary about hitting it. Like, because I know, okay, I'm paying out 3 ticks in order to do a market order here. So I really need to think that it's about to go in order for me to hit it, right? So one thing that might make me hit it, and I've had okay success with this. Sometimes I've screwed it up, and I think I'm still kind of perfecting the technique on it, I guess. But sometimes you will see, you know, a move will happen, and the traders are just not there in the micro, and so the micro doesn't follow the main ZN, and you can take advantage of that. So I've done that sometimes, and I've had some success with it. Today, though, that's not what happened. Like today, somebody was there to buy all the way through all of that. You see all that? So maybe that edge is gone now. I wonder. The reason I close my trade is these spikes have a habit of spiking, but yeah. You know, I'm really one that really likes to let them ride, you know? If I can end up getting a $50, $100 tick trade, you know, in the micros, like I go for it, right? Part of it is just a personal thing that's like, I had so many moves where I felt like I took it off way too early, and I knew that it was going to keep going, and I just didn't have the fortitude to stick with it, sort of a thing, you know? But this doesn't seem to be the market that we're in right now. This is the market that we've been in this week, has been incredibly range bound, even with the big news. When you come back and you look at the chart here, and I bring back up the volume profile, I mean, look at that. That's a pretty tight range, man. It's a pretty tight range. And even here with this one, when they went on the upside, they went right back up to the top of that range and stopped. So for the contest, I'm just gonna leave it on. I don't know, maybe it goes all the way down and I end up taking a big loss, but my plan was swing trade it. So, and I've been looking at the people that are like winning right now. And there's a lot of people ahead of me, and they're all like up 30% on the week. It's crazy. Like, it's just straight up crazy, right? They're taking really big heavy hitters and just catching a swing and then getting out and not letting it ride. So don't think I can compete with that. Based on what? Well, I think that we saw the little bit of a liquidity hole that we're getting here. I think that was am I wrong? Because that I think you getting it exactly on, and I thought that was well played. I personally would be too weary to take that one in this kind of a situation, you know. Because you know that if that one doesn't work out, that you could lose more than 2, right? If I was going to do one of those, I think that I would have to be one of those low R trades, and I hate those. I hate that. I kind of don't want to play that game on stream per se. That I don't want to give people bad. I'm okay with taking multiple contracts and then taking some contracts off. Taking, you know, that's one thing, but like I'm gonna take profit at 2 ticks and have like a 4 tick stop. I really avoid doing that because I'm afraid that people will watch that on the stream and think that that's a strategy that they can get away with, and because a lot of people do that. Can you explain each column on the DOM? Sure. Haven't I explained these to you? So this white column right here, the ones with the white letters, that's, and the gray background, that's the current price. Current price. And then just to the left of that is the volume profile. That's pretty clear, right? Then the blue column is bids. Those are limit buy orders. The orange red column is offers or limit sell orders. And then the two columns in between are the market orders that are being matched against those bids and offers. And on the middle column, when we move away from a price and come back to it, then it will reset so that you can see how much volume it took each time that it ticks. Oh dear. It's too early for this sort of thing. I think I'll stand by for that one. Already, it's not even 15 minutes and they're already having problems at work. That's no good. It's okay. They're okay. Oh, and Dewey's been trading since 2008? Really? Wait, like, have you been trading, like, futures and the DOM since 2008? Like, I started watching markets in 2008, but I didn't get into futures until much, much later. And I think that if I had tried to get into futures earlier, it probably wouldn't have happened. I probably would have gone, like, a different path because, like, back then, like, TT was the only game in town, you know? No, I do not put the stacking and pulling columns on my DOM. That is a feature of Jigsaw. I think it's a really cool feature, but here on the treasuries, I'm able to see it on my own. You know, just as an example, or do you see it there at 30.5 that about 400 contracts keep pulling off and then stacking back on? Oh, not with that. You started with the DOM when Jigsaw came out, gotcha. Yeah, see, I had kind of been following things like I worked at a bank, so I couldn't trade anyways. But I kind of knew when, you know, like when I started, it was like you could just do TT. And then Ninja Trader came along. And then the Jigsaw add-on came along. And that kind of all happened while I was still at the bank. So when I got out of the bank, like, I knew exactly what I wanted to do. So I went and got Jigsaw and all that stuff. So I'm a little bit skeptical of this pullback. But is the ECB press conference starting here yet? They are still taking pictures. I'll pull it out here though. And I'll put it above me here. have to turn off financial juice. Brannigan Barrett. The ECB chose the best of two bad options. Hiking 25 basis points was important because despite the recessionary fears rising, they maintained credibility for now by prioritizing the inflation fight. Note: the ECB has now signaled a peak for rates, bearing any crazy change in the inflation dynamic. Wow. You got US JPY at 85 and sold it at 110? Wow, how much did you make on that? That would be an insane profit, right? Especially if you're like leveraged up the way that Forex allows you to do. Like, that could be crazy. Oh, look at it. What the volume could be very different. Sure. Okay, so oh, here she's speaking. Let me turn her on here.
But is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. In order to reinforce progress towards our target, the Governing Council today
Yours does look different.
the 3 key ECB interest rates by 25.
So I think the reason why yours is different is because yours is showing the volume for the whole session, including the overnight session, whereas mine resets when we start the pit session at 8:20 Eastern time. That's probably why you're seeing the difference.
Monetary policy transmission. The September ECB staff macroeconomic projections for the euro area see average inflation at 5.6% in 23, 3.2% in 24.
Yeah, it kind of solved a lot of my problems.
In 2025.
Oh.
This is an upward revision for 23 and 24 and a downward revision for 25. The upward revision for 23 and 24 mainly reflects a higher path for energy prices. Underlying price pressures remain high, even though most indicators have started to ease. ECB staff have slightly revised down the projected path.
What just happened there?
For inflation, excluding energy and food, to an average of 5.1% in 23.
Dude, who turned the ECB president into a cyborg?
In 24.
Let's see here. Maybe if I
Our past interest rate increases continues to be transmitted forcefully. Financing conditions have tightened further and are increasingly dampening demand, which is an important factor in bringing inflation back to target.
We all good? You still with me here?
With the increasing impact of our tightening on domestic demand and the weakening international trade environment, ECB staff have lowered their economic growth projections significantly. They now expect the euro area economy to expand by 0.7% in 23, 1% in 24, and 1.5% in 25. Based on our current assessment, we consider that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to our target.
CL hit the high. Oh, they got the 90.
Decisions will ensure that the key ECB interest rates will be set at sufficient.
Well, the oil was kind of disappointing yesterday, but they sure came roaring back, didn't they?
Necessary. We will continue to follow a data
pushing super strong this morning.
Determining the appropriate level and duration of restrictions. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission.
So if you look at the treasuries here,
They are set out
the way this is moving, this is exactly why I hate trading during the ECB press conference, right?
now outline in more detail.
They just slice through. So even though they're putting about 1,500 to 1,800 at each price, you're only trading like 500 a price, and it just boom, 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 boom. It just goes through, and there's like no warning or anything because they're just doing stuff based off of like what she's saying. And so it can just like the floor can just completely fall out from underneath of you at a moment's notice, and that's why I hate it.
In the third quarter.
I don't think I've ever had real success at trading during these press conferences.
Tight financing conditions are dampening growth, including through
On the Jigsaw Vista, what does interval width do?
services sector, which had so far
Oh, hold on.
is
And
now
just
also
show you.
weakening. Over time, economic momentum should pick up as real income are expected to rise.
So
supported
the
by
interval is like how frequently it happens.
and a
Okay,
strong
like this one, I have it a new interval
under
every 10 seconds. So it's like turning it into a 10-second chart.
the labor
The interval width
remain
is how thick each of those intervals are. So if I increase the interval width, you'll notice that I kind of like zoom into it a bit.
low of
Like if I make it 12, then those individual bars are a lot bigger.
while
see?
employment
Interestingly, they don't actually make them bigger. They just increase space between them.
the services sector,
But
which
that's
has been a
that's what the
major
interval
driver of
width does.
employment
So it kind of zooms in on things.
2022 is now also creating fewer jobs. As the energy crisis fades, governments should continue to roll back the related support measures. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for an even stronger monetary policy response. Fiscal policies should be designed to make our economy more productive and to gradually bring down high public debt. Policies to enhance the euro area's supply capacity, which should be supported by the full implementation of the Next Generation EU program.
So funny here on Zero Hedge, they're like ECB preview, a tough call, but one final hike most likely, and then later ECB surprises with 10th consecutive hike. Okay, even though you predicted it, it was a surprise, huh?
Should be concluded before the end of this year.
Okay.
And progress towards capital market union should be accelerated. Looking now at inflation. Inflation declined to 5.3% in July, but remained at that level in August, according to Eurostat's flash estimate. Its decline was interrupted because energy prices rose compared with July. Food price inflation has come down from its peak in March, but was still almost 10%.
No, when it comes to the...
In the coming months,
So let me show you here on ZN.
price increases recorded in the autumn of 2022 will drop out of the yearly rates, thus pulling inflation down. Inflation, excluding
Oh, is it
energy and
in
food,
here?
fell to 5.3% in August from 5.5% in July. Goods inflation declined to 4.8% in August from 5% in July and 5.5% in June, owing to better supply conditions, previous drops in energy prices, easing price pressures in the earlier stages of production chain, and weaker demand. Services inflation edged down to 5.5%, but was still kept up by strong spending on holidays.
I guess the default settings that I got here are
high
pretty good.
growth of wages.
Sometimes on this Vista chart,
Rate of
it's
compensation
useful to like
remained
change these other settings in here.
5%.
So like if you come in here and say on
The contribution of
the
labor
depth
costs
/ imbalance,
domestic inflation
it's
increased,
only showing like one level.
in part owing to weaker productivity, while the
The
contribution of
flip,
profits
I'm only showing like
first time
the
since
first
early 2020.
few inside levels.
Most measures of underlying
And so it gives you a really, really
inflation
clear
evolve,
picture of like
growth
what's
and
going on
become more
on the
uneven.
inside bid and ask,
Contribution
which
of
is kind of
cost,
a little more
energy
interesting.
Price increases is fading out. At the same time, domestic price.
Yeah, the width does the same as the zoom. That's accurate.
Most measures of longer-term inflation expectations currently stand at around 2%, but some indicators have increased.
As you can tell, I don't
Closely.
mess around with it very
So
often.
what's our risk assessment? The risks to economic
So the reason is that
to the downside.
what really matters is
Growth could be
how the market orders
monetary policy are more
and the limit orders kind of interact with each other.
weakens.
So it's that point where things meet up
China.
that you're really trying to see.
Growth could be high.
And the Vista chart just doesn't show that very well.
Labor market, rising real incomes, and receding uncertainty mean that people and businesses become more confident.
The Vista chart shows really well, hey, there was a big order that's been here how yay long.
Risks to
That's what you see on the Vista chart. And I don't find that information really very useful.
on the cost of energy and food. Adverse weather conditions and the unfolding climate crisis more broadly could push food prices up by more than expected. A lasting rise
Really?
in inflation expectations above our target or higher than anticipated increases in wages or profit margins.
So did you hear her just say the thing that they're not supposed to say?
Contrast,
Yes, fighting climate change increases interest rates.
transmission or a worsening of the economic
Because all of your rules are resulting in higher energy prices, which drives inflation.
especially over the medium term. Turning now to the financial and monetary conditions. Our monetary policy tightening continues to be transmitted strongly.
Well, I don't watch the volume profile per se.
Funding has again become more expensive.
You know, to me, it's important that
Are replaced
there's 1,000 on offer, but it ticks up on only 653. And how many times it's done that?
longer-term
That's what I'm watching.
operations
And when I see a change in that kind of behavior, those are the things that I'm mostly paying attention to.
and mortgages continue
Because basically,
in July,
I need to see what are the latent liquidity conditions.
8% respectively. Credit dynamics have weakened further. Loans to
The only way that you can determine what the latent liquidity is watching what actually trades there over a period of time
households also grew less
and the pace at which they're doing it.
1.3% after 1.7% in June. In annualized terms, based on the last 3 months,
I just think it's a really important thing because you know, your brain is going to come in and is going to look for patterns, and if you're sitting there looking for patterns that are just random, then you're just wasting your time, and your brain is training itself on noise.
fell from 0.6%
So it's important to note, like,
time low of
why is the order flow actually valuable?
in July.
The most valuable thing from the order flow is what are the market orders doing? The pace of the market orders. Is there an imbalance between market buys, market sells? That's the most important thing,
Fine,
right?
but
Then the next most important thing is how the limit orders react to those market orders when they hit.
medium-term target in a timely manner in order to reinforce progress towards our target. The governing
I don't think that heat map can show you the numbers, no.
ECB interest rates by 25
Or we call it the Vista chart. But
Based on our current assessment, we consider that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to our target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In any case, we stand ready to adjust all of our instruments with
Oh,
our
what's
mandate
this?
to ensure that inflation
From
returns
Nomuri's
to our
Miguel
medium-term
got
target and to preserve
this overrider stop-in has been an ongoing theme, which then further contributes to the market rally over the past 6 months of the rally and is again exemplified this week as the market front-runs the monthly QYLD cover and reset, knowing they're underwater on the calls they sold last month, as they will be buying those options back on Thursday with Delta impact as we approach expiration before resetting Friday and setting the new October NDX calls on Friday.
Much for the so-called doves, but also the hawks. So how did you come to a compromise? And the second question, is that a dovish hike, meaning that's it now?
Does sound like it's a dovish hike.
Of course not a hawkish pause, but is that the end of the rate hiking cycle, or?
She gonna take the bait there?
Thank you very much for your two questions. So how did the discussion go? We had a lot of data, a lot of analysis done by staff. And obviously this was a projection meeting and projections that was prepared by the ECB staff. So we looked very closely at all those data. And to give you an example, we spent hours and hours yesterday, morning and afternoon, with the usual.
Do any of your add-ons have the historical limit order numbers?
Chief economist.
What do you mean? Well, none of my indicators can show you historic
As much as possible.
level 2 data unless you had the indicator on the chart at that time. There's just no way to do that.
At the end of this morning session,
Because no data platform provides historical
the analysis
market
was
depth
conducted on
that I've ever seen.
inflation, on anticipation. And obviously some members
Yeah, if there's limit orders, sometimes price can rise without cumulative delta rates. Yes.
would have preferred to
So when you see a price move that's not accompanied by cumulative delta, the first thing that I would go and check is correlated assets.
certainty, more intelligence would have resulted from the passing of time and the impact of our many previous.
Different if it's ES. Yeah, ES is
of the
different
governors to agree
because
with
it's so much of a derivative.
we have made and that I have just read to you. So yes,
No.
members
Like-
in the governing council
So some platforms have this thing where
and
it's always saving the market depth,
a solid majority.
but it's not getting it from like the data provider, right?
Did what and when, but suffice to say that the majority was solid. And it was a very
So Jigsaw does that too. That's why when I opened up my Vista chart, you could see the stuff. It's basically, it says the DOM saves it no matter what.
deep into the numbers and the analysis and try to really take into account the sensitivity analysis, the scenarios that were provided by staff, really discuss the baseline and the impact of our measures in the past. And I'm happy to go through the process that we followed in terms of reasoning. Now,
I don't believe you.
on your second question,
Not that I'm saying that like you're lying, but I think that
it was a
we would need to go and read the documentation to see what it's actually doing there.
But this is theater. And what we have decided is actually reflected in that key paragraph, which I have read twice because it is in the body of the text, which was released to you earlier, and also in the conclusion of the text.
Okay, there's another new high.
That's caveats, based on our current assessment. So it is based on all the data, the numbers, the analysis, the assessment, the projections, and any other information that we have available. We consider that the key ECB interest rates have reached levels.
You know what? I was paying really close attention to what she was saying, and then I lost the focus.
Sufficient long.
I had a real ADHD moment there.
The time element that comes up will make a substantial contribution, those are heavy words, to the timely return of inflation to our target. And that we don't stop here. The whole paragraph is important and needs to be read in
What do you consider as compression and expansion?
future decisions will ensure that the key
These are not
will be set at
empirically defined terms.
sufficiently restrictive level. That's number one. For as long as necessary, number two. Those are really two parameters that are going to guide us very much. Not that we are forgetting about the three components that have guided our reasoning so far, and we continue. We will continue to follow a data-dependent approach. You've heard that before. Data-dependent approach to determining the appropriate level and duration of restrictions. In particular, our interest
I'm
rate
gonna reset
decisions
things
will
here
be
just
based
so
on
I
our
can
assessment.
kind of keep track
And
of
I
the change a little
repeat
better
them.
here.
It's in the text. Number one, inflation outlook in the light of the incoming economic and financial data. Number two, the dynamics of underlying inflation. Number three, the strength of monetary policy transmission. So that addresses your question, and I think that the exegesis that no doubt some of you will conduct in relation to substantial contribution and how that substantial contribution contributes to means significant level maintained for as long as necessary based on current assessment gives you the answer to your question. Thank you.
Thank you. Now turning to our online participants, I'd like to give the floor to Balazs Korani of Reuters. Balazs, please.
Good afternoon. Thank you so much for taking my questions. First question is about asset purchases, President Lagarde. Is 2024 carved in stone for PEP reinvestments? And if not, do you expect a discussion on the APP? Do you expect a discussion about...
So when I search for it, I do find stuff on their forum about them talking about historical market depth.
Which is about,
But
I guess the question is whether a recession is becoming your base case for the Eurozone. Do you expect a recession perhaps in the third and fourth quarters, or do you still believe that the quarterly numbers...
I'm not finding data on like what it actually is.
Thank you very much for your two questions. On your first question, we regard interest rates as the key tool in the work that we are doing in order to reach our 2% medium-term target. So we have not discussed the PEP program and the reinvestment and the forward guidance.
So I don't know if it's like the full depth. Because there's one thing that's out there that is like the historical best bid, best ask, for instance.
Proper transmission of our monetary policy. We have not either discussed any kind of APP outright sale. And on your second question, I want to... Sorry, you're missing a little bit of happening here on the floor because something is falling. But you're not...
Something fell.
What's going on here? So, you are correct, Balazs, that the GDP has been revised...
I don't like what she's wearing. It makes me think of a Chinese dictator.
0.9 to 0.7 in 23. And
I'm just, you know, I'm a fan, Christine,
5 to 1%.
but I'm not a fan of this look. I'm not.
Let me just take a moment to explain to you what seems like the biggest revision, which is 2024. Most of it, actually 3/4 of that revision, 0.5, is actually attributable to carry over from 23. So
It's interesting, the S&P 500 move higher off all this, huh?
period of about 5 quarters of very, very sluggish growth. And we are, based on our projection, coming to the end of it.
Where do you think the dictators got their
The
inspiration?
same calendar, the same quarter calendar that we have had in the June projection.
Well, you're saying just wondering if this is possible compression and expansion. So like,
Downgrade from 1.5 to 1, as I said, is carryover from...
if you look at a chart, you're going to see periods of lower volatility and then breakouts and moves to higher volatility, right?
The recovery that we had planned for the
We can explain that
is actually
by looking at it in the perspective of large meta orders, right? There's nothing actually going on. The market is going to kind of trade in a range based on correlations and so forth. And then when a large meta order comes in, it's going to push it to a different price range. And that's the quote unquote expansion. So people on charts will use these patterns and will use these terms and so forth because they think that these patterns can predict the price movements.
Maintained for a sufficiently long period of time.
But it's nonsense. So like that kind of terminology, as I don't find useful.
For how long rates will have to stay at the
right? I wouldn't even like.
And then,
unless you have some sort of an empirical definition of it, right? That's like, okay, here in the statistics, you tend to see this behavior, and we call this behavior compression and expansion, and here's all of the information that we have about it. That's not something that I look at or use.
I'm not going to...
What's a meth? Or wait, what? Or did we say that?
Obviously, all picked up that the level... Are two key.
A meth order is what happens when you are on your phone and autocorrect.
And as indicated in that paragraph,
autocorrect is really off, and for some reason you talk about meth a lot. So it's a thought that
we believe that the interest rates that we decide will provide a substantial. Contribution.
Does this allow you to profit from other people's loss? Look, in futures, anytime that you are making money, it is coming at the expense of somebody else. It is explicitly a zero-sum game. The way that they do it is they take everybody's money and they put it in a big pot, and then the people that lost, they take money away, and the people that gained, they gave that money to those people. That's how it works in futures. It always comes from somebody else's.
Future projections.
Always.
And subsequent assessment. That's what we are tasked to do.
I'll catch you later, D.
Determination to reach the 2% medium-term target in a timely manner.
Now, the thing is, in futures, is that a lot of those people expect to lose.
Oh, yes.
Because they're hedging, essentially. So they're not putting a trade on because they think it's going to go a certain way or something. They're putting it on there so that they're protected in case it does go that way. But on average, they expect to lose money on it.
I think the sentence that I read is really the...
They're paying a little bit of money to reduce the risk in their portfolio.
We have made sufficient contributions under current assessment to returning inflation to target in a timely manner. And as I said, both elements matter, the level, sufficiently restrictive, and the duration. But it's obvious that the focus...
I'm gonna apologize again. I'm working on not very much sleep today, so I'm probably not giving the most clear, straightforward answers.
We are at peak.
Right. And the next question.
I know it's complicated because the as long as necessary cannot be actually pinned down, and the substantial contribution cannot be either pinned down, because it's every time an assessment that we have to conduct against the data, against the analysis, against the various information that we derive from experts, and against the projections and what our staff...
Well, can you believe that we're back up at the highs?
Okay, thank you.
You think that we'll break out to the upside now? Oh, this is all really wild to me.
At Jackson Hole, you told that the ECB has to maintain its credibility with the public. How do you evaluate the ECB's current credibility? The question is, 15 years after Lehman collapse, do you think that banking system in Europe is safe?
I'm not seeing the one at 07. It looks like you would have gotten it.
Those are big questions.
But personally not seeing it at the moment.
On credibility of a central bank...
I would be too wary of taking that one with the fear that it's just going to plow through to 08 and 09, especially with those big orders like right there on the edge.
To determine whether the central bank, ours or any other central bank, is
I think I'm going to hold to my rules of not trading when I know that I haven't had good sleep or that I'm compromised in some way, and not trading during a press conference. But I find the level break setup here at 06.5 very compelling. In fact, I will do it on Sim.
On the line is to reach the 2% medium term in a timely manner. And we will do everything we have to do.
Because they're iceberging at 06.5, so they're doing the setup. And there's these big orders right there. Like everything I think is really well placed to have a kind of breakout here.
Thanks, my dear.
Now it may be short-lived.
Good afternoon.
Oh, thanks.
Well, 15 years after Lehman, I think that the situation of the banking industry in Europe is totally different. Banks are much more resilient. This is something that we have reiterated several times.
Yeah, I get you typed it, but you totally would have gotten it. I'm not sure I'm necessarily seeing the setup that would have triggered it.
I think that makes a big difference. And I think that we have a very good...
That one to me was, well, I mean, you did get it though. And it is coming back a little bit.
This kind of events didn't have any impact on the European...
I'm just a little concerned about the amount of risk on that one, right?
The European banks, that they are resilient, that they can...
Like I'm just saying,
even,
if you took it at 06.5, I'm assuming that if you are one tick loss that you're taking if you're one tick winner that you're taking 1 to 2 tick loss, right? Because if you didn't, like if you said, I'm going to take a 1 tick profit and I'm going to take 2 tick loss, so I would have puked out at 07.5.
Identified.
The chances of you possibly slipping and getting 08.5 are actually really high there, right?
And that's the focus of attention that we are putting now in terms of financial stability.
So I see that as a really risky play, and I'm not seeing enough of a direct evidence of like a hole here per se.
President Lagarde, 2 questions from me.
That I would feel comfortable taking that mean reversion trade. But it does look like they came up to the high and they're kind of bouncing off of it for the time being.
Recession worse and adding to the woes of the Eurozone economy. Second question is to ask you whether the expectations that national central banks and the European Central Bank are likely to make sizable losses in coming years. Is that having any...
I'm skeptical about that.
Your discussions, is that something that is having any impact on your decisions at the ECB? Thank you.
Well, thank you very much, Martin. I will dispose of the second because I think it's going to be a fast response to your point about whether the likelihood of...
Unless you're basing that on some sort of like
national central banks or the ECB...
volatility band or something like that, and you have a lot of data to support that level, I don't understand how you can be that confident about it.
Addresses also now your first question. No, because the objective that...
Especially not during a ECB press conference, right?
It is not to make profit. It is to procure price stability within the euro area. And
well, there it is again at 05.
I would observe that the fight that we are leading, we're not the only one, but the fight that we're leading against inflation is making progress. And what we're doing today is trying to reinforce that progress. Remember back in October, we were at 10.6. We're down to 5.3 now. So it's been divided by half. Is it satisfactory? No, because it is, and it is expected by our projection to still remain too high and for too long. But inflation has declined, and we want it to continue to decline and to reinforce that process. And we're doing that not because we want to force a recession, but because we want price stability to be there for people who are taking the brunt of inflation, high prices, and predominantly so.
So I'm looking at this leaderboard for this CME Group trading challenge thing. Okay.
And the next question goes.
And this guy, Flex GC, has made $43,000 on 41 trades.
Santiago, please.
basically all today. He was not on the board before that.
Of M&I.
Is that
Hello, good afternoon.
legit, or are they like cheating the simulator somehow?
Dependent and held for long.
Because how can you? Yeah, I'm leveraged as high as it will let me go, and I've basically made 10,000 off of these moves. So how did you make 43?
Further, in other words, it's
How is that possible?
restrictive. That sentence could imply a cut. Thank you.
That's not something not right about a lot of these.
But
Kind of suspect though that there's a lot of people that basically did the same thing that I did, and yeah, just get good. I think that a lot of people did what I did and just took a swing at the beginning,
at that level,
and that's why there's so many. That's why I'm back at 100.
having the two components,
What I'm doing is too common.
one will drive the other actually. And on your
I don't know. I don't think that that's possible to make 43.
Thank you. Then Christian Siedenbiel of Frankfurt Allgemeine Zeitung. Christian, please.
Yes, thank you. Good afternoon. Madame Lagarde, how much are the problems in the real estate market?
Like this down and up that we've had is maybe like 5K, right? So if you got it short and then reversed, you're still talking about like 10, 20. How did they get 43?
looking at residential real estate, which affects obviously at the end of the day households and people, or whether
Am I crazy to think that that's a little suspicious?
this is a sector
These other ones I think I kind of understand.
very much to the circumstances.
It's just this guy that is right up there
And
after having not been in the top 10 before on one day that I find a little suspicious.
bring inflation down is one of the factors that that cause this overall real estate sector to be in a difficult situation at the moment.
Every once in a while, I get.
I mean, we're not
Sorry.
oblivious to it. We know it, and as I said to Mr. Arnold,
He would never trade the same way on his own. Probably not. But even if he's doing it on a SIM account, how is he doing it?
of delivering on our mandate, which is price stability, and we want to do that timely.
Thank you. And the next question goes to Eshe Nelson of the New York Times. Eshe, please.
Good afternoon. I'm Isha Nelson from the New York Times. Can I ask for your assessment on the pace and the strength of the transmission of monetary policy?
I fell a little bit there again.
Fastest contraction in household.
Um,
Do you feel that
I closed that. It did look like he was trading UB.
like too quickly, too strongly, or slow enough? And
It was UB and he had 43 trades.
wages to keep rising as long as
I don't know, man. It's wild.
labor costs in their profits. Are you starting to see that be possible, or is there a risk of either kind of wages
And you can take 10 contracts.
where they were?
Well, thank you so much for the two questions. On the transmission channel, there is evidence that the current hiking cycle is transmitting to financing conditions faster than previous ones. So you will remember that we use three
Let me think here.
elements in our assessment. One is the inflation outlook, the second one is underlying inflation, and the third one is the strength of monetary policy transmission. On the third one, I think we all shared the same view in the room earlier today, that this channel of transmission is strong and stronger than we have seen in previous cycles. So when you look at how fast it transmits to various rates, whether it's overnight or whether it is
Oh, you know what?
it's extremely rapid.
I think maybe I'm seeing this wrong.
Lending rates for corporate and the lending rates for household, which
I'm
393 and
Now that can't be right at all.
statement. There is a transmission, and it is having a constraining impact
So
that is visible.
So if you've got 10 UB contracts, right?
Of loans, when you look at the
Then you only need to make like 3 or 4 ticks to make $1,000, right?
transmission is effective and more so.
So if you were scalping it here, and just taking the $1,000 every time, then 43 trades, $1,000 each time. That makes sense, and I could see how you could be getting away with it doing that, right? But if that's the case, then shouldn't I have way bigger profit than what it's telling me?
Still increasing at 5.5%.
Because let's see here.
And the participation has increased by 0.2%. We are beginning to see some signs of weakening in the volume of hires, and notably in some sectors that are related, particularly in the service sector that is related to manufacturing. We are beginning to see some signs. But overall, when I look at my numbers today, it's employees' remuneration plus 5.5, employees' participation in the economy 0.2 plus, and the lowest unemployment rates we ever had. So, and we're looking very, very carefully at that because it's having a serious impact on inflation, particularly inflation in the service sector, which is typically much more labor intensive. Now, what are we seeing in terms of profit? When we look at profit unit cost and its growth, it is still growing. But that growth is, for the first time, having an inflection downwards.
Average position 125.29.
The assumption that we have made throughout, we made that at the June projection, we are making it yet again.
And we're 126.02.
That gradually profit will squeeze in order to...
I don't think that the simulator is calculating my profits correctly.
This is the first time. So we want to be confident that is a lasting component. It should normally be so, because as demand is dampened...
No, wait, 125.29.
...reaction in the corporate world. Thank you.
Thank you. I think I saw Chiara De Felice of ANSA asking for the floor, right? Or did I not? No? No, that's okay. Then Eric Albert of Le Monde, please.
6, 5.
Thank you very much for taking the question.
So am I actually only up 9 ticks? No, there's no way that I'm up only 9 ticks. Because I bought that.
Drag on overall growth.
No.
Is it? And that might also be a question for Mr. De Guindos. And then in your first question, in your first answer, you were saying you could elaborate on how you reached the conclusion of doing a hike today, despite the risk. Could you please elaborate? I mean, how do you reach this conclusion of yes, a hike is needed after all?
Shall I take the second one and then you take the first? Okay, so I'll take your second one. I'll take you through the reasoning that we adopted. We had
Monday the 11th.
Bound by that intellectual reasoning, that we would approach the assessment using 3 key criteria: inflation outlook, underlying inflation, strength of channel.
125.29.
The transmission.
That is correct.
As I said earlier on the third criteria, there is no question in anybody's mind around the governing council table, if you want to sort of propel yourself into that room. There was shared analysis of that, with little variations at the margin. On the first item, which is the inflation outlook, well, we looked at the projections that were given to us by ECB staff. We looked at experts' reading and analytical work. And when you look at the projection, you see that, I was going to say, notwithstanding the GDP revision.
No, ruler's not what I want.
A revision upward of headline
Here's the open.
In both 23 and 24, and a 0.1 revision downward for 25, which is, hallowed with uncertainty, because the further out you go into the projection, the less certain it is. On the core inflation, which we look at as well, not only one, but we also look at core inflation. Core inflation is maintained in 23 and revised by 0.1 in 24 and 25. But overall, we are not at target in 25 on headline inflation. And we are
1,000.
almost on target on core, and we only hit the around 2% in the fourth quarter of 25. So when we look at that, we ask ourselves, okay, inflation outlook, how does that compare with our commitments and our target? Not there yet.
It is still what it is showing me.
As I said, it's the key sentence in that monetary policy
It
statement.
is wrong.
And the current assessment with this decision of 25 basis points hike, we believe that we are making a substantial contribution to blah, 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 blah.
Wait, what is my chart doing here?
Repeating yet again. So those are the elements that we take into account. And then the real purpose of what we're doing here.
Oh, did we flip back around?
It's somewhere else.
Oh, I see.
Document that you have. Where we
I
say,
see.
I hope I can find it for you right away. It's in the first.
It's just the whole profit of the trade has been basically traded through here during this session, and the UB is getting crushed at the moment. That's what's going on. Okay. I'm like, how can I only be up?
We want to be as time.
How can I only be up like 1,000 on the position?
We support our projections with a higher degree of confidence, and I think it will reinforce progress towards targets. So we are determined.
Actually, it looks to me
And we see that as
like
the best way
I
to accelerate the process.
was that the kind of the big guess that we made in here.
Expectations, which are broadly at 2, but which warrant monitoring.
So one of the big guesses that we made was, okay, I don't think that the spread is in favor of this trade, but I think that in the end, duration will make me more money, was kind of the conclusion that I made. And the spread is really, really working against me right now. The 5-year move way more than the 30-year. So I've made a decent amount on 5-year. I've made almost twice as much on the 5-year as I've made on the UB, despite being long 10 contracts on both. Isn't that interesting? So if I come back to these
we have made a lot of
to this leaderboard,
potential impact that commercial property
though,
might have in the financial system.
Yeah, these guys at the top
some channels
are trading UB and ZB, so
commercial
I don't know.
And mutual funds that would reinforce,
It kind of seems to me that if I had YOLO'd in on all of the small end contracts, even though they're kind of smaller,
vulnerabilities for the
that
financial system.
if I had maxed out my margin by just going, okay, I'm going to go the long the 2 and the 5, and I'm also going to go long like all of the stirs and all of that sort of thing, then maybe it would be working out.
This is something.
Of course, that this all assumes that like the long end of the curve recovers here and we come back up to those highs, which is not happening at the moment. This level break trade really did not work out.
Very much. Good afternoon, President.
Good afternoon.
So, given the
I think I'm going to allow this to go a little bit further. I'm going to do my usual puke.
you have already explained, but can you give us a sense of how concerned is the Governing Council about the chance of a recession, and especially in places and countries like Italy where most, if not all, the economic activity depends on
These guys that are at the top of the leaderboard, they're probably doing,
Economic activity depends
you
on
know,
financing. So
take 4 ticks and just take as many trades as possible, right?
peculiar to Italy. Banks in Europe play a critical role in financing the economic.
Which I would say, like when Octavius, you said he would never trade the same way with his own account. I actually bet you that a lot of these guys would.
Sluggish.
It's just that they usually don't realize that, you know, you can blow your account in one day when you're doing that. Like it works most of the time, and then when it doesn't work, you just get crushed.
PMI, whether you look at the gap between manufacturing and services that is now being reduced, we are clearly in a period of slow and sluggish growth. But as I said, the revision that we're making for next year, where we're moving from 1.5 to 1% of growth, is for 3/4 of that revision attributable to the sluggish.
When you watch this in the 10-year, so that's what was really throwing me off here was in the 10-year. It's like, okay, yeah, we moved down, we reversed, we've pulled back from the high, but it's just right. And so far, it's a reasonable pullback, and they're trying to pull back up here and maybe make another attempt at the highs, right? But when you look at the long end of the curve, the UB and the ZB, it's just been back and forth across the whole range multiple times.
To be sustained, and labor has to hold. Those are some of the assumptions that we make in that respect.
If I had been taking profits and I had just taken the range multiple times, then you could make 4,000. So maybe it is legit.
Mark, please.
But what I find suspicious is the way that this guy, because yesterday they were like up 20, 30%. And now you have this one guy that wasn't even in the top 10 up 40 is
because of adverse weather.
I still find that a little suspicious.
Related to climate change. I know this happened in 22 already. Have you got concrete indications that this is happening again, and this could in fact impact the inflation number? And related to that, my second question is, has the ECB made any progress in thinking about how to make its operations aligned with the Paris Agreement in times of monetary tightening still? Thank you.
Sure, thank you very much. On the first one, as I said, the food inflation has come down, but it is still at 10%.
It's not weather, it's stupid policy over by people in the Euro area. That are basically like shutting down all of the farms and all of this other stupid stuff. Yeah, it makes your food more expensive. Who'd have thunk?
Continue to go down, but it's one of the components that is still very high. I would enlarge your question to the price of commodities in general, because we are seeing.
It's not the weather that's causing the problem. It's your irrational response to the weather that is.
And obviously the Black Sea Agreement denunciation by Russia is flying in the face of stability, if anything. But whether it's grain, whether it's oil, whether it's gas, we're looking at all those components very, very carefully, because some of them are volatile.
Are you working today? So the market has been
on prices.
Okay.
I think we will have to.
Let's review with the chart. Okay.
To really appreciate what impact it has.
Let me show you what happened here.
Activity around the world as well.
Oh, what a day. So on the initial ECB, when they raised rates, but Treasuries bought on that for some reason. I don't understand that. Then we had the PPI, retail sales, jobless claims, and retail sales in particular was like spot 6 versus an expected spot 1. And jobless claims was lower than expected. Overall, the numbers were not good. Okay. And so that's why we sold down. And now here during the ECB press conference, we have kind of like slowly retraced that whole move and then done a pullback.
Paris compliant.
Now, what I had just been talking about was because I was trying to figure out why is my trade over on the CME account challenge, why is it not more in the money? Well, because the long end of the curve, when you come over here and you look at the ZB, and it's basically like the whole range of the week. They've basically gone back and forth the whole range of the week. Let me pause them here and turn on our own music because the music that plays off of the ECB usually gets the video flagged. So anyways, the ZB just went across the whole entire range. So the long duration portion of the curve is really doing some wild and crazy stuff, but overall selling. So we're getting like steepener here again today, basically. Which is what we should expect, but I kind of thought that the duration would do more for me than it is. I suppose that it would if we'd actually broken out into a new range. You know, like if UB was up into the 127 and beyond, then maybe it'd be a different thing, right? Now, I did take the trade on both ends. It's just that right now, you know, what I took in ZT and ZF is not enough to compensate for it. So, well, so after all of that, I sure feel like that I would potentially have some opportunity in all of this. I don't think that this one really worked out very well. I think I can probably let it ride. I don't know. I guess one of the things is that the whole like treasury complex buying up here seems a little like nonsensical to me. Like I can't believe that I'm so lucky that they're still going up overall. I can't explain that one. That's got to be some difference between US and Euro bonds and all of that sort of a thing that's causing that. Because why would they, you know? Like US bonds are buying up more because the ECB is being too hawkish and raising rates again one step further than the US is. Because that's kind of what it looks like. So I'm going to have somebody that's much more sophisticated with the bonds than myself explain that one. Reading a story here. I guess in this article about the new way to think about equity volatility, his final conclusion is politics trumps economics is the lesson I've learned the hard way. Politically, it feels there is less political risk in Japan, so this premium in VNKY looked like an opportunity. However, this view is based on a political judgment, which means it could change quickly if politics changes. But see, the reason why you're seeing that is because there actually is more political volatility in Japan than normal, because usually whoever's in charge over there, you know, sees widespread popularity, and right now they're a little bit unpopular because they've been seeing inflation rise. So that's why you're seeing that opportunity. But basically, I think for us, the the calculation that he's basically coming up with is that equity markets are likely to do well over the next year because the administration and government and everything is going to do everything that they can to clamp down on volatility so that they can get reelected. Okay, shall we read about retail sales? Following July's buying spree, expectations are for a slowdown in retail sales in August as Bank of America omnipotent analysts forecast for a decline of 0.1% month over month, with the gases rising the only saving grace. But for once, Bank of America were wrong, as the party kept it on going in August with retail sales exploding spot 6% month over month, rising for the 5th month in a row. That is a 2.5% year-over-year gain. Retail sales beat across the board with core up with spot 2, and the control group, which is used for GDP calculations, rose 0.1%. Under the hood, the big driver was a 5.2% month over month in spending at gasoline stations. And non-store retailers were flat in August after surging in July on Amazon's Prime Day. Finally, remember this data is normal, not real, so be careful how excited you get about this data. Gotcha. Another one, well, let's just read all three of them, okay? Because I think there's interesting things in all of these pieces of data here, okay? Following July's... No, that's the retail sales one. Okay, after yesterday's hotter than expected rebound in CPI, all eyes are on PPI for signs that it wasn't the pipeline for inflation may be more dove-friendly. Producer prices rose spot 7% month over month in August as the hottest PPI since June of 2022 and pushed year-over-year prices up 1.6%. Goods prices are re-accelerating fast, now back to inflation year-over-year, as services cost growth slowed only modestly. As a reminder, much of last month's PPI rise was driven by a big jump in portfolio management costs as stocks soared. August saw a further rise in those costs. More problematically, the pipeline for PPI appears to have inflected as immediate demand is re-accelerating. This is not what the Fed wanted to hear, so I agree. I wouldn't say that it's like a huge deal, but I don't think that the PPI was what the Fed would want. And then we come to initial jobless claims. After the prior week's tumble to the lowest level since 2022, thanks to Ohio fixing its fraud situation, expectations were for a pickup in initial claims last week, and the headline print did rise very modestly from 215 to 220. But on an NSA basis, non-seasonally adjusted basis, jobless claims dropped to their lowest level since September of 2022. Once again, we think it is important to remember that two distortions that likely boosted initial claims over the last few months, potentially fraudulent filings in Ohio, and expanded eligibility for unemployment insurance in Minnesota, and that has now been erased. And just to make it clear, Ohio has been the state with the biggest decline in initial claims for the last few weeks. And you can come in here and you look at that and you can see, okay, at the beginning in May, that was when you had this big rise, and now it has come all the way back. And so really what you're seeing is that jobless claims have been pretty much flat for most of the year in reality. And just to make it very clear, Ohio has been the state with the biggest decline in initial claims for the last 4 weeks. Continuing claims rose very modestly the prior week, but remains below the key level. As a reminder, the unemployment rate is now at its highest since February of 2022. Okay, so all of the economic numbers that we got, I would say, are hawkish. Indeed, yes, they are hawkish. But for some reason, what the ECB just did ends up being like a dovish hike, I guess. Because they did hike, but markets bought, or the treasuries bought on that. So I can't explain that one. That's a little weird to me. I suspect that there may be some interplay between the difference between Euro bonds and US bonds. And since I don't have data for the Euro area stuff, I can't really say. And like I said, I did take a sim trade in here, but I did not get much sleep. I'm not expecting myself to be super on today. In all honesty, because of the way that things have been going, I've I've been more cautious this week than I normally would be. Because normally I would be like, okay, well, there's going to be opportunity, like we need to trade it, right? I'm concerned that next week things start getting a little weird. Like that the volatility comes back and stuff. So I'm kind of waiting on that. Now, as for the treasuries themselves overall, what I see is the liquidity is still pretty soft. I mean, they're putting up good numbers now. They're putting 2000s back up, so that's good. But, you know, they're still able to trade through it really easily. When it does move, you know, like just that tick down, 435 to tick down. They did just kind of sweep through the VWAP there. Gee, you said long 01. I'm guessing the bail on that one now, yeah. Yeah. After that one up. It was interesting. I thought it was curious that you were doing it at right where the VWAP was, but just I don't like those trades when it's like so mushy. You know what I mean? Like the floor just comes out from underneath you and there's no warning whatsoever. It's just like the correlations move and you move and there's nothing you can do. Like there's no time to get out of the way. Hey Francesco, how's it going? So that's still kind of like the liquidity conditions overall. And in terms of like what the market is doing, like what are the orders doing? Well, I can see fairly persistent selling in the 5-year. And I see fairly persistent selling a bit with much steeper pullbacks in the 30-year. But the 10-year, on the other hand, has kind of been a little bit more mixed with some periods being much more buy. Certainly at the moment, though, it is... Oh, well, okay, so I have to puke here now, right? So I will puke. Flat, okay. But we are kind of moving down towards the bottom of this. So, like, we have visited the ends of this range multiple times now. Are they going to eventually push to one side of this range and break out one side? Or is this going to settle somewhere in here? Kind of suspect that it could settle somewhere in here, but let's see what happens. And I guess the other thing that I need to note is that, again, the yield curve has steepened through all of this. So steeper does kind of suggest to the upside, which kind of makes me wonder if we flip back around and these start pushing the downside, if you see that flip and then we start flattening. What else? Oh, no, these other comments are already covered. Those are just from way back. I was reading Uzi talking about printing Affinity $1 billion and everything. So I had an idea yesterday. Here's my idea. We should crowdfund building a pyramid. Why has nobody tried this? Like that the crowdfund would be to build a pyramid of equal or greater majesty to the Great Pyramids of Egypt. The location could be anywhere, but care will be put on the precision of the building and the longevity of it to make something that is even longer lasting than the Great Pyramids and is even more difficult in scale. So, like, you know, the blocks need to be the same weight or heavier or something like that. You know what I mean? I think you could probably crowdfund that. But then there'd be all these questions about, like, how do we know that this is actually going to go to the legitimate purpose of building a pyramid and all of these sorts of things? So I don't know if it's actually a good idea. But I'm just kind of like, why has nobody tried this? Like, why don't we try and crowdfund building? Because I bet you that could take off and that you could, like, crowdfund $1 billion to build a pyramid. Totally could do that. Oh, really? That's a good deal. I don't know. Equities are kind of acting a little bit odd in this situation as well, aren't they? But I suppose that since the open here, they've just kind of traded down and erased the gains that they had from earlier. That's okay. I need to go back to sleep probably. But I'm gonna stick to my schedule. What I really want to do is I want my wife to wake up so that I can go and yell at her again. I'm kind of looking at this going like, should I just be going short? Like, because you know what, I'm gonna try it just because, like, what the hell, why not? Oh, I can't believe I didn't get filled there. Okay. I'm skeptical about them reaching lows, but I can't help but root for it, you know? I love me a stop run, and I feel like that if we breached the lows here, that you could see some good fireworks, you know? And maybe it breaks the stops and then comes back up here, but I still think you could get some good fireworks from it. Alligator's been posting some good stuff in Discord. I've been missing a lot of these because it's like during the European session. I have not seen. This is a really jarring roller coaster today in the treasuries. I'm really quite glad that I'm not trying to trade it like with live, because this is like a really wild. Okay, so I think that, yeah. So part of this is like, I think that I should be able to develop a position here and like a little bit of a liquidity hole sort of a thing. But I was kind of hoping that there was going to be like some continued momentum there. So this is very much looking like the you were too late sort of a thing. Yeah, and look at that, the bid there and everything. It's like, because I like the timing of that and everything was random for me. How is it that I end up in that situation even when I'm trying to take it random? Yeah, I am seeing. You know what? I need to turn that back on. I am kind of seeing a little bit of signs of liquidity hole though, because like you just see the bid and offer like pull really easily. Granted, you could probably consider almost all of the action here today like a liquidity hole of some sort, right? This is just really mushy. I think I need to go back to sleep too. I really don't feel like this situation, this, you know, like normally there's a lot going on, right? So that could provide a lot of opportunities for us. There's volatility overall, number one. And sometimes when you're getting that volatility, sometimes the liquidity can give you like really, really good reads. And sometimes you can kind of make a judgment about, you know, why the market is moving the way that it is and where the flows are ultimately going to go. Like, I think from my perspective, I'm really honestly perplexed as to how we had the buying after this, how the treasuries were up at points after this. Because basically everything that happened from my perspective is hawkish, you know, should push the treasuries down. So we absolutely could have made the judgment call that after the ECB press conference is over, we want to go short, right? We totally could have done that one. But like, the problem is that there's so much going on that it's hard to know if that flow is actually going to come through for you or not, you know. And by the time it's really looking good like we are right now, it's like maybe already too late. Like maybe the flow, maybe that was everything that there was to sell, and there's, you know, we can't get any more to push us to the lows and get those stops and so forth, right? So I feel like this is a day that you know, could have been a really good day for retail trading, but just didn't quite turn out like that, did it? And then on top of that, I didn't sleep well, so maybe I would see it differently if I was sharper. And I can definitely see where I'm like not as sharp, because I'm not. Well, I had one trade that was pretty bad for starters. I've been losing my train of thought. I just haven't been as interesting. Yeah, it'll affect me. Okay, so I did get that order there. That gives me, I think, good room to try and let this ride. Not that I'll make back the 1,000 unless I really load up, but Jiwi says I was lucky more than anything. I thought the first one was a really good call. The first one was really good. I don't, you know, I'm really worried about trying to take those when it gets nutso. But I definitely saw the spot and you took it quickly and got it. That was a good trade. Just remember, though, that next week, the markets are likely to shift in a big way. and it's either going to be the start of the fall and the markets just, you know, throw a complete fit and start looking really, really ugly, or we begin the end of year rally. That's basically what Monday is going to be. So once the weekly expiration, once the monthly expiration is behind us, you're going to see the market is just going to completely change. So there's not necessarily, we don't necessarily want to be taking huge risk here with our account, right? Or I don't necessarily want to take huge risk here with my account, is what I should say. So I'm still frustrated. So the reason that I'm so frustrated is that my son, he cut his foot somehow while he was outside. I don't know what it is. He's autistic. He doesn't talk. So you know, he comes in and we're playing with him, and I'm looking at him, and I'm like, you know, like, his foot is pretty cut up. Like, we should do something about that. It looks like there's a little piece of skin here that we need to cut off, and there's like dirt in the wound and so forth, right? So I want to clean it up. And my wife was like, no, just like do it later so that where he doesn't freak out. Maybe we can do it when he's sleeping and everything, right? So she's waiting for him to be like dead asleep before she does something, and then he wakes up and is in like serious pain. So basically you let a dirty wound sit and fester for several hours, and that's basically why I'm not asleep tonight. So that's why I'm mad about it. It's like, if we had just done what I had said to begin with, then none of this would have happened. I feel like a part of being a man is understanding that sometimes things hurt, and that the thing that you need to do is going to hurt, and you just need to take it. Okay? Sometimes there are people that oppose you, and of course you always want to try and work and teamwork and cooperate with people, but sometimes there are people that are just bad, and the right thing to do is to just impose your will. Like, violence is a tool. It is a tool that should only be used in extreme circumstances, under certain circumstances, like when your life is under threat and you are defending yourself. But it is in fact a tool. And I feel like that whenever those tools need to be used, that I've got all of these people around that are like, no, we have to sit and think about our feelings and discuss it, you know, morally and everything first. Like, no, I don't have time. It's like, you got to sit and be decisive and do things sometimes. Yeah, also being a man means you're always wrong. It's just, I hate it. You got to do what you got to do. That's how I feel. That's how I feel. Right? Is that like the way that I feel is that I wish that you understood that these are situations where your predisposition and everything kind of works against you, and that you should just trust my judgment on it. You know? It just... so that I could go and do the thing that I've got to do without worrying about everybody being upset about it. It's like, either fall in line or get out of the way. she'll bring it up in a fight 3 years later. Like, you know, like the other thing is from my perspective is like, it doesn't bother me that like, this is not a huge deal, right? But what I want to hear is, okay, you're right. And in the future, I'm not going to let that happen again, right? In the future, wounds will be addressed and cleaned immediately or promptly. Promptly would say promptly. And that we won't wait and allow them to become infected. Not that I know that it's infected. I mean, he was crying about it, but it wasn't like obviously infected or anything. So there is a little bit of uncertainty. The other thing that, there's the other thing that drove me crazy about this was that like he started crying in the middle of the night, right? And so she's and he's in the bed with us. And so she's like holding him and like, what's wrong? Can you show me where it hurts? Where does it hurt? And this goes on for like 30 minutes. So I'm like, look, it can only be like one of three things, okay? He either just doesn't like that we're putting him to sleep. There's like something wrong with his stomach. He ate something bad. Or this cut on his foot is bothering him. Okay, so there's a very easy to figure out which of those things it is. Right? Number one, you take him out of the room so that he doesn't think we're putting him to sleep. Okay, that didn't do anything. So now I'm going to address the foot. Oh, he absolutely flips out when I try and clean his foot. It's definitely the foot, right? And I'm just like, why didn't you do that like 30 minutes an hour ago? I don't understand at all. Don't understand at all. How severe is his autism? Good question. I don't know. He is 3.5 and he does not speak at all. So I think it's severe. I'm starting to believe that he will never speak. I don't think that there's any way to know that. I have seen big developments in his communication recently. For instance, I can ask him to get something and he'll do it now. He will point, he will go out of his way to try and tell us what it is that he wants or what he wants to watch or whatever the deal is. So those are improvements. But when it comes to making any kind of sounds, like words with his mouth, he just doesn't even want to even try to form words. So I don't know if he's ever even gonna speak or not. You have a nephew with autism and he is 6 and doesn't speak. Yeah, the crazy thing is I've heard stories of lots of people that they didn't speak until they were 5, and like the family didn't know anything was wrong. Like how do you get to 5 and the child not speak and not be like there's something, like taking him to doctors and stuff? But then I've heard stories of like at 14, all of a sudden they start speaking. So like apparently the window like never ends. I don't know. I don't like thinking about it. I don't. I mean, I don't think I have any problem with taking care of him for the rest of his life if that's what we have to do, right? It's just really disappointing, because you want your kids to go out and go on their own and have their own family and all that sort of thing, And that's one kid that didn't happen with. It's really, really sad to me. And you're constantly questioning, like, should I be doing something differently? Like, what's the correct way to deal with these problems? And it's, you know, and this thing with the foot is like a good example though, right? Because he doesn't let you just do it. Like, so eventually, like the funny thing is that like, I was like, I think that you need to like cut that off and like dress the wound and everything, right? And she's like, no, I'm just going to let him soak, and then it soak and the dirt and stuff will come out and everything, right? But he was like flipping out, like screaming at the top of his lung, like he was being tortured or something, you know? So eventually we ended up, you know, cutting that piece off and putting tons of Neosporin on it and, you know, gauze and, you know, it's just like a little cut. It's not enough for like stitches or anything like that, but it's on the foot, so it's, you know, stays open essentially. So eventually we ended up doing my way, right? But he didn't do it willingly. We had to hold his leg and everything, right? And he screamed, and it was really traumatic. And so I'm looking at this and I'm like, okay, so this is traumatizing for him. And as somebody, and with ADHD, those like limbic parts of the brain down here at the base of your spine and everything, like get triggered really easily. And like once it gets triggered, like it just keeps going until you can finally calm down or like you go to sleep or something like that, right? So when that's happening, I know that like I'm creating trauma, right? So like, how do you deal with that? Do you just accept that there is that trauma is a part of his life, essentially? And maybe it's a tool, like maybe he doesn't want to go outside without shoes again. I would hope. I can only hope. Or do you, you know, really, really go soft on him and so that you don't create the trauma? I don't know. I don't know what you're supposed to do. I don't think that anybody does. Because even, you know, what do you do in specific situations and stuff, right? This is no easy answer. The same with the older kids. When you get problems with the older kids, there's not easy answers. Trauma will heal. Well, he forgives you. Like he knows that we care about him and love him, and he's not like us autistic. Most autistic people, they don't want to be hugged. They don't like, you know, that's not him. He likes to snuggle. That's how we put him to sleep, etc., etc. But so it's not that, but it's still like encoding something in his brain that can't be undone. But I was gonna say, when you get to the older kids, you get similar sorts of problems. Like if I feel like I'm being disrespected by the older kids, and so I kind of put my foot down on something, well, it's not gonna make them friends, right? So I took the call. I never got that kind of shit again. But they don't I don't think that they necessarily like me. It's like it, you know, when stuff needs to get done, I still got these little girls are like, but our feelings. I don't give a shit. I'm getting shit done right now first, and then we can talk about it. These are the problems they deal with. Overall, I'd say those are pretty small problems, but they're also kind of big problems, aren't they? So really, it's like they're big problems that everybody deals with, and there's a lot of people that are dealing with a whole slew of other issues that I don't, that I'm really glad that I don't. Well, I tell you what, this trend, they continue to be going down slowly, but this one has kind of been bouncing like this one, the liquidity hasn't been getting out of the way. So maybe they do eventually push through it, but they're not going to make it easy. CVS and Cigna charge $6,000 for $55 generics? I bet it's more complicated than that. Let's read about that. This is pertinent to my interests. Health insurers dramatically mark up prices of generics, and pharmacies are in on the scheme. Brand name generic Glivec, which is a cancer drug. Sensipar, which is for kidney disease. Zytiga for prostate cancer. Whoa, like they set the prices with the pharmacy because they own the pharmacy? So like you have an insurance plan and you're charging your own insurance plan $6,000 for something that's $55 they're generic for? What the F? That's nuts. Hey, thanks for stopping by, GB. It's been fun watching you, the things trades you've been trying to take. Oh, there's a little bit of a little pop there. Basically back to where it was, though. Basically, 26 is like the liquidity hole. Maybe too late. How long has it been? 20 minutes. Problem is in this market, it's still pretty marshy, I would say. So like could easily move out of that range. Also, feels like the dollar is making some moves. The dollar's turning around here again, so maybe the treasury's completely reverse again. I don't like that. I don't like the sound of that. Okay, I'll protect myself. Does anyone really think that either party is going to attempt to impeach the president for alleged crimes that they likely all commit, inviting scrutiny on themselves? To me, it's a joke. I think that what Biden allegedly did goes beyond that, to be honest with you. So, and what Donald Trump does is not something that everybody does, although I'm not sure if it's a crime. Freaking Twitter is like a bizarro world now. So Elon Musk tweeted a picture that's like, remember Ice Cube? This is him now. Feel old yet? And before it shows Ice Cube before, and then Ice Cube now is just a glass of water, suggesting that Ice Cube melted, right? And then the first response is Andrew Tate saying Ice Cube keeps it real hard. Like, the fetch. Okay. Oh, look, they stopped me out. That sucks. Dude, it's been a shitty day. I should be able to, like, swing this and make big winners, but I've just been playing it all wrong. I keep coming into the edges and wanting it to break out, and then it doesn't. And I don't really actually have anything to really tell me that it's going to go one way or another. Like, this amount of volatility is a little irrational in my opinion. Dewey Bod Vent. What kind of a name is that? That is an interesting name, my friend. Bod Van Nuvel? It's Belgian. Ah. Very interesting. Dude, you know what I've been learning? I don't know, I learn weird things all the time, but you know, and I took French class, so I thought I knew a lot about French, but like I'm starting to learn that I don't know as much about France as I thought I did. You know? I'm starting to realize that like everything that I thought I knew about France is basically like just Paris. Like just Paris is like that. And other parts of the country are completely different. Like, yeah, the area up near Belgium and then the Belgians themselves because they speak French. That's a completely different thing. The people down in like the French Riviera, that's like a completely different thing. And then they've got like these tiny little nation state down in there too with Monaco and everything. Comparing Paris to France is the same as comparing to, yeah, it is. It is. But so I would put it this way. In the United States, most of us look at the French as like, you know, they're far lefties over there. Like they're all just like really hyper liberal, very, very liberal country, basically. I mean, that's where a lot of those ideas originated from. Anyways, so yeah. And I guess that is the way that they tend to vote overall, but there are still very much so, you know, parts of the country that think very differently from what like the end vote ends up being. Yeah. Well, not just $90 oil. We're now at 90.20. We've gotten a 20-cent jump here in the last 5 minutes. What's this? I'm reading this on Twitter. Ben Shapiro's tweeting about this. Alex Thompson, Biden initially resisted the term Bidenomics before embracing it. Now he's trying to stick a label on Republicans. MAGAnomics. Okay. Biden's new attack wrapped the GOP in MAGAnomics. And Ben Shapiro says, man, the absolute branding genius required to just add nomics to something. Right? What's your thought on the point of control from the volume profile of prior days? I have a video that my most recent video is about the volume profile, and I backtest that and basically explain why I don't think that the prior day point of control is very useful. Maganomics equals $100 grocery order and Bidenomics equals $180 grocery order. Okay, well, so let's go in, because you know what? I actually think that there are some things about what I think Donald Trump is likely to run on for his economic plan that might be problematic politically. So let's read the Axios story on this. So Axios is really good at picking up on like internal strategy of the two parties. So if Joe Biden is going all in on Maganomics now, you're probably going to hear a lot of it. Okay, so what is it? President Biden initially resisted the term Bidenomics until he embraced it to tout his economic record. Now, he's trying to stick a label on Republicans, Maganomics, to accuse them of plotting an assault on Medicare, Social Security, and the middle class. Oh, okay, yeah. So basically, the same strategy that Democrats always use in like basically everything is, oh, but if you elect the Republicans, they're going to take away your Social Security. No. Maybe there's some fringe Republicans that want to do that, but by and large, the Republican Party supports Social Security and Medicare. And Donald Trump in particular, and Maganomics is very much in favor of Social Security and Medicare. So he's trying to stick a label on them that is just outright false. So for today's example, 25 half where we stopped has been the most traded price yesterday's and 2 days ago. I'm not saying trading based on market profile, but yeah. Well, we've been stuck in a range, that's for sure. That's for sure. I don't think that it's like the prior day's price has anything to do with it, but like if we have a range based on some sort of fundamental group of factors and currency correlations and so forth, then if those were the conditions yesterday, they're likely to continue being the conditions today. But I can only make that calculation based on knowing what's going on. It's a little weird today that they seem to be respecting those again, despite a lot of strong economic data coming out and the ECB press conference and all of that, which kind of has me thinking, is it doing this because of the options expiration tomorrow again? I kind of suspect so. Okay, anyways, let's keep reading. Why it matters. At a time when the GOP is mired in congressional dysfunction and former President Trump's legal troubles, Biden's team wants to define the Republicans' agenda for them and rebrand Maganomics, a term the White House initially coined. Biden's push begins as House Republicans wrestle with internal disputes in a budget standoff that seems likely to lead to a government shutdown at the end of the month. Yes, that's true, but it has nothing to do with Social Security and Medicare. With real household income having declined 2.6% in 2022 and polls showing voter dissatisfaction with Biden's economic record, Democrats want to make the 2024 campaign into more of a choice between competing economic visions rather than just a referendum on Bidenomics. So they're basically saying, well, yeah, our economic vision sucks, but you definitely don't want the Republicans' vision. I don't think that strategy is going to work for them very well at all. Like, if that is not... Okay, so if I was Democrats, what would I be pushing right now? So number one, I don't think that I would be trying to make excuses for or like pushing Bidenomics. Because the more that you talk about Bidenomics, the more it'll piss people off. Because at this point, pretty much everybody understands that it was Biden's policies that kind of led to what it was. You could be trying to make the argument that like it wasn't us. These are just after effects of COVID that are inevitable to happen. That's probably what I would be saying instead of trying to defend your economic policy and saying, see, look, this is making the economies great, because everybody knows that it's not. So that's how I would be blunting that. Yeah, you'd be lying a lot, probably. I also think that I would definitely be spending a lot of time talking about abortion, because abortion seems to be the most effective wedge issue for Democrats. So that would be the first thing. The second thing is, if I wanted to take ground, I would be talking about the cost of housing. So I guess my strategy as a Democrat would be the same as my strategy as a Republican, is I would be saying, look, we've screwed up. We've had this housing crisis brewing for like 20 years now, and there aren't enough houses. And we're going to do things to ensure that more houses are built. Because here's the thing, that I think is really actually quite bizarre about this situation, is that I think that Republicans are more likely to actually implement some policies that will get us more housing. But I think that the things that would get us more housing are policies that would tend to be more liberal than conservative. Like, I would think that conservatives would be more interested in zoning requirements and these sorts of things to prevent the character of their neighborhood from changing and to protect their home values, especially since Republican voters tend to be older. And so those older voters would be more invested and interested in maintaining those policies, right? Whereas the Democrats, allowing people to build high density housing everywhere, that would be totally in line with what a Democrat would be okay with. But it seems like at the current time that they're the ones that are kind of standing in the way of that. So Democrats could probably turn one of their biggest vulnerabilities into a strength if they had a good plan on the housing crisis, right? Because their best demographic is like the millennials, and they're losing the millennials. That's why Biden's underwater. If he said, I'm going to get the price of housing under control, and he started doing things today towards that end, then maybe he would pick millennials back up, right? So if I was Joe Biden, that's what I would be doing, I think. Anyways, just kind of trying to go down on strategy. Why is this a bad strategy? This is a good strategy, etc. I hope that maybe kind of explained that. But I need to finish reading the story. The president is taking a short trip to Maryland today for the second major speech on his economic agenda, offering an update on remarks he gave in Chicago on June. Biden is seizing on proposals from the House Republican Study Committee's budget unveiled in June to accuse Republicans of wanting to raise the retirement age for Social Security benefits while cutting taxes for the wealthy. House Republicans have understandably been reluctant to tout the Maganomics budget, but the White House is going to spend much of this fall doing it for them. Senior advisor Anita Dunn said in a White House memo to congressional Democrats. Okay, so I don't think that trying to brand it Maganomics and everything would be very effective. Because to me, if you were going to call something Maganomics, it would be like get rid of all taxes and just have tariffs. That's what Donald Trump actually wants to do, right? And that's what he's going to be pushing. And so you're trying to push this one way of doing things, and then Donald Trump is just going to completely change the conversation on you later, right? But they do have something to seize upon, which is that one of the proposals that was put into this thing where they were saying we have to deal with Social Security and everything, what can we do? Well, one of the things that we can do is raising their retirement age. That was a battle that they had go on in France for a long time, and everybody threw a fit, and now you don't hear about it anymore, huh? Because the reality is that probably raising the retirement age is inevitable. I don't think that I would be surprised if they had a proposal on things, if you wrote a document on what are some things that we can do to deal with the Medicare and Social Security problems that are facing us in like 2033 or whenever things turn negative, right? And it didn't include raising the retirement age, like what are you even doing? Because that's the easiest, most sensible change to even make, is just that part of the reason we're having a problem is because people live longer, and so you need to raise the retirement age. That's really simple. Okay, the big picture. The economy under Biden and under interest rate hikes by the Federal Reserve has defied expectations. Now a soft landing in which inflation moderates without meaningful increase in unemployment seems possible, Wall Street analysts say. But inflation, which is down from its 9.1% high in June 2022, has eaten into real wage growth and fueled Americans' perceptions that the economy is worse than its overall numbers indicate. Biden's campaign knows that the poor marks he gets in polls for his economic record is a potential liability. Oh, a potential liability. Okay. So the campaign's first big ad buy for this fall aims to convince the public that businesses are hiring and creating good paying jobs. Yeah, that's not... I tell you what. It doesn't matter what's going on with the economy as long as people's real wages are down. Okay? If you get out like 5 to 10 years from now and then real wages over that time period are actually up in line with like their historical averages, and we recover this decline in real wages that we've had from the inflation, okay, then people will forgive it. But I'm just saying, yeah, but you're all making less money, but Wall Street's doing great. That is such a stupid strategy. I'm sorry. Okay. Yesterday's inflation reading showed that overall prices rose in August, but the report has some positive data as well. Core inflation, which the Fed looks at, is trending back down, Biden told donors at a fundraiser. Between the lines, Biden's argument now is a revised version of his strategy at his most recent State of the Union speech, which he accused Republicans of wanting to cut Social Security and Medicare. They then dared them to prove him wrong. Yep, and they all got super upset about it. I remember that. Republicans responded to Biden's challenge by standing with him to show their support for popular entitlement programs. During the debt ceiling negotiations, Republican leaders who maintained the allegations were on unfair reading of a proposal by Rick Scott vowed not to touch Social Security or Medicare. Flashback: at the outset of the Trump administration, officials heralded the arrival of Meganomics, vowing to rethink economic assumptions and promising 3% growth by cutting taxes and regulations. Bottom line, in embracing the term Bidenomics, the president's team made a strategic decision to own the economy, calculating that Republicans would try to blame them for a slowdown, regardless of whether it was real or imaginary. Well, it is real. There was a slowdown and it was real. Whether or not people are still thinking about that by the time the election comes in 2024, that's the real question, right? Because if we have the quote-unquote soft landing and market just continues to rally into 2024, then probably people at that point probably will feel pretty good about it, right? On the other hand, if we get a recession here in the second half of this year, then that's a completely different thing, right? And then Biden is really screwed, right? Or let's say if we have another economic crisis that hampers growth, like another Silicon Valley could do it, right? Another Silicon Valley could do it. Between now and the election, Biden's probably screwed. Like, then he stands almost no chance. Like you could nominate Michelle Bachmann and she would still beat him. I shouldn't have said that one. That's going a little bit too far. Okay, but you get what I mean. Man, this turnaround, they're still trending up a little bit here. It seems correlated with the dollar loosely. The Japanese yen. I know. I'm really bothered by this world where it almost seems like you just never get a move without it. The currencies. You know, and I'm not seeing as much moves like when it was inflation, we'd see this a lot, where it was a good move that was really solidly from the flows in the treasuries. But now all of a sudden it just, you know, over the past year or so, I'd say that like every time that we have a move, it's the currencies, not the treasuries. So I'm like a dollar index trader, and I hate that. And I don't think I understand very well how the dollar moves. Jason Furman, the breathless debates over whether real wages are up since pre-COVID, and not sure why it's debatable. They are up. Well, since pre-COVID, that's probably true, yeah. Are all missing a key point. Households, workers are mostly getting bigger pay increases than the data suggests on repeated cross sections versus longitudinal data. So the data everyone is looking at does not actually answer the question of whether wages or prices have gone up by more or over a given period of time for most families. In fact, they tend to systematically understate wage growth. Now, opinion, I don't think the question of whether something is above or below zero is as relevant as everyone thinks. Also, don't think most humans think in units of time that Twitter debates do. Yeah. Because the way that I would look at it is we had a period of inflation that can undoubtedly be laid at Joe Biden's feet. And I just don't think that you can run away from that. Even if, like, it's done in its past and we've recovered since then, I think that people still remember that, like, what Biden did was just terrible. But if their real incomes have recovered and, like, the reality is that their incomes actually are higher than before the pandemic, maybe some people forget about it. A lot can change in a year, can't it? Anytime I look at something like that, because like one of the things I find really interesting about markets is that the time frames always end up being longer than we think. Like when the market is on a tear, and we're like, oh man, this is like super crazy. There's no way that the market can continue going up like this. This is just completely not in line with the fundamentals, you know, and eventually this is going to sputter out and turn around. And the amount of time, like the time frame that those sorts of things function on tends to be a lot higher than we think that they will be. And in that period of time, so if we look at a year, for instance, the number of things that can happen in the year, you can be just looking, you just go back and look at 2020. You can be looking at a completely different world in a year. That's why it's really silly to try and make a prediction like Donald Trump will definitely win, Biden will definitely win. I think at this time, though, I would be betting that Donald Trump wins. Biden is so unpopular that if the election was held today, Trump would win. Probably. Well, I guess the question for today on the treasuries is, where do they settle today? Because they might just come to that 110 and just decide that that's good, right? I'm glad I read that whole story. See if there's anything else out there that I missed just before we get going here in a minute or two. Nope, nothing new over here. Trump won't go to trial in Georgia next month as judge rules to split cases up. Oh, but that's what they wanted, wasn't it? They're saying that they're not going to try it all as one big RICO case. Bloomberg Business. It takes very little for Congress to avoid a shutdown, just short bill extending funding after the September 30th deadline, but House Republicans are far too dysfunctional to produce anything like that. That's I don't like the term dysfunctional. I wouldn't say that what's going on is necessarily dysfunctional, but yes, the Republicans do not have the support to just get a clean bill passed. No. They're going to try and extract blood. And because they didn't get it last time and they've kind of got McCarthy on the ropes. And you might even see, there might even be a possibility that Kevin McCarthy gets ousted from the speakership this month. Like, I'm kind of starting to see that brew. So if that happens, that should be fun, I guess. Big bid at 31.5. Reset it again. E-mini is gonna press highs. Came awfully close there. That last little move is within the range of volatility, but it's odd that when they started pushing back that there's a offer iceberg there at 31.5. That's very, very different from the action that we've been seeing so far today. Mitt Romney says it's time for baby boomer politicians to move on. I mean, I want to agree with you, but I'm really not convinced that Gen X or millennial politicians will be any better. All right. Today, wild roller coaster. Amid PPI, retail sales, and ECB. Save. All right, guys. I we'll see you. Well, I kind of was just looking at the graph today. Kind of an interesting day. But it kind of did fizzle out in the long run, wasn't it? So I will see you guys tomorrow, Friday. Can't believe it's already Friday. In the meantime, stay excellent, team.